Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, October 11th, 2019. A couple things I want to cover and point out today. And there's always a lot of moving parts to the market, and I think most eyes are probably on what the indexes are doing today. You know, we've clearly taken out those levels, as mentioned this morning. We clearly broke out above that 77.86 there level, quite a few levels here, the 77.21, and we've been working our way up that downtrend line. So I guess most importantly, we took out the top of the August trading ranges as well. And this is a downtrend I continue to watch on the futures. We've been walking up this thing, and it's pretty darn clear. And you know what stands out to me too when I look at a chart like this is look at how almost perfectly parallel it is. Look at the slope on this trend line, and that's been the market has this, you know, just this series of, and these were all trend lines that were here before that. You know, they're not after the fact trend lines, and that's been the MO. You know, you break down now. Like I've been saying, and I said yesterday, this calls that near-term downtrend into question. Certainly, this is NQ. This is that recent high right here, and we've taken out several of the previous reaction highs, including we had 1, 2, 3 right here in NQ. So that is, like I said this morning, unless these breakouts fail, which they could certainly do, and they may not. It's near-term bullish, but if nothing else, this market has been plagued with these whipsaw signals. Remember, we had a failed breakout right here the other day, and it's the nature of the, you know, volatility is still high. The market is near the all-time highs, not too far from it, but we have this increased volatility recently, and I'm referring to the breakout of this trend line right here, this one here, and then that was followed by a quick move down. Regardless of the near-term trend, an active trader can certainly, I think there's an opportunity to be made, and we already had a quick jog down. If you look at the 1-minute charts on QQQ or the futures, we spiked down here, kissed that trend line perfectly. So I mentioned at the time, a break pretty much below today's lows will have certainly taken us below that trend line. And if you zoom in real quick here, there. And so I had mentioned, I think I put it up in the trading room. Yes, only in the trading room. I said a break below today's lows, and I am looking at the futures, I'll get to QQQ here in a second, would provide either a day trade entry, and I gave targets there. As you can see right here, 77.86, call it 77.87. Remember, I always cover a little shy of the actual support level if shorting, just like I sell a little shy of the resistance level, and possibly down here. Now, another option too, we're still off the highs. There's still, you know, like I said, we really need to reverse today because we're going to regain. If we don't, we're going to regain some key levels on the daily chart, like those trend lines. And so, you know, as I said, unless this breakout fails, it's hard to treat it as anything but near-term bullish. But again, we'll see what comes out of Washington today, any headlines, anything, or next week that moves the market. But, you know, active traders, this line. And I'm going to speak a little bit again about the, you know, the lack of you know, swing trades. Even though we've made this breakout, the market is still below the previous highs, has not taken out those highs, and you know, and I'll get to that in a second. It's just not a conducive market for swing trading with most stocks. When I say most, you know, the mostly the large cap, even mid cap and small cap stocks that are indexed, because the indexes, the major averages are just moving, really grinding around sideways. And here it is. This is just a 60-minute chart, but you can see here go nowhere for the last few months. And so what that does, it makes swing trading nearly impossible. There's certainly some trade ideas out there. I mentioned earlier this week, and I followed up in the trading room today, a handful of the shipping stocks that I highlighted on Monday. I believe each and every one of them is up anywhere from 5 to maybe 20+% since then. And I said at the time I like that sector, and I said it in a video the other day, because these little shippers that I'm talking about, like NM was the first one I posted. Was it NM? I believe so. There was a handful I posted. Let's see. No, it was actually TK. I posted even a chart on that. Was one of my favorites, and there's so many, like I said, in there, and I've covered these stocks many times over the years. There's fewer sectors that I know of that can produce such outsized gains in short order as the shippers. This one's up 52%. just since Monday, since I mentioned them on Monday. That one's climbed 52%, coming up on a back test here and resistance. So a lot of the meat for the near term may be out, but I always say this: never underestimate just how far these things can run, just how overbought they can get. I've seen, and they're just measuring a move right here, 130%. I've seen these things many times over the years, and posted many of these setups gain triple digits, over 100% in very short order. It's not all of them. Typically the smaller they are in market cap, bigger potential. And you can just look at a chart. Any of these charts, if you wonder how far they can go, just go back to a long-term chart and look at the moves and measure it out. You can see what's when I'm doing this. You pop-up box on the left at the bottom shows you the gain. So they're from low to high right there in 5.5 months. This one went up 334%. But I also said this in the trading room too the other day when I posted these setups. It cuts both ways. This one dropped 86% in 7 months there. Since the lows right here, it's rallied 370%. And again, as I showed you, just since I started highlighting this sector on Monday, 60% or so gain on that one. The other one, the first one that I mentioned, was TK. And there's an example. I said a breakout over this level, 402, targeting the 478 area. Well, we still just a few pennies shy there, and so that target was hit today, and that was, whatever it was, a gain of 18%. These are unofficial trade ideas. I post them in the trading room. These stocks are so aggressive that usually don't make the cut for front page trade ideas. You have a lot of investors and people new to the site, not used to trading, see the dollar signs to the upside, but again, these things fall just as fast as they rise, and so as I said, there, you keep your position size small. If you are an aggressive risk-taking trader, then it fits the bill. Keep your position size small, and I like to take a shotgun approach, and that means I will spread money among numerous names within the sector, not just one or two. Here's one of two watch lists. I have two different watch lists, and you can see these stocks, just how much they move, and there's a list. Of course, that was one of my top picks. That's up today, but look, right at resistance. So again, not the most objective time to add. Now, if the MOMO, meaning the momentum, stays in the sector and they break out, as I listed my next target here at 630, it would be ideal to see some consolidation here, because I have quite a few, and that's why I posted updates on them today. Quite a few hitting my price targets, like this one. We had this quick rip here, and it'd be nice to see some consolidation, then a breakout to help alleviate. We're not super oversold, but I'll say this too. Little cautious, because if we pop that level soon, we might have a divergent high there. We would have if we pop it soon, and so I'm just going to watch the sector. But I view it, the old childhood game of musical chairs, and that's where you stand in a circle in kindergarten, and they have play music, and there's a whole row, a circle of chairs. Kids dance around. There's 8 chairs for 9 kids or whatever it is, and the music stops. You have to sit down and grab a chair, and the last one standing doesn't have a chair. What I'm referring to there is you don't want to be the last long holding these at the party. When the party ends, here was a quick rip here, about 22% gain. When the music stops, if you don't have a chair, meaning you're not using stops, and you think that it's going to keep going up, you can lose a lot of money, just like you can make a lot of money in short order. So there it is. Long-term chart, a lot of reactions there on that 478 level, and so that's why on this one, personally, I'm taking profit here today. If it breaks out, I may jump back in, but again, a lot of reactions there, maybe a little work to do. And let me get to some other things I wanted to talk about on the market, and really gold and the US dollar. I want to talk on that today. Oh, before I leave this chart, with this or any trades, when you have a momentum trade, trading, one of the rules in trading and investing is let your winners run, cut your losers. And so what you can do too is, you see a gap right there, you can set a stop. Depends where you entered. This was the objective entry price listed last week. We were even below it at the time. You can just raise your stops to protect profits. Take partial, full profits if you want, or leave the whole thing on and just trail up stops and let it ride, because as I said, overbought. These stocks redefine the term overbought when they want to run, and these have been in a bear market. So if we break out, we have a new bull market that starts in the shippers. There's some fundamental issues, by the way. I don't want to I didn't mean to talk too much on these trade ideas. These again are unofficial trade ideas posted in the trading room. But a couple things that had to do first with the U.S. I'm recalling an article from a few days ago putting an embargo on a Chinese company. I think it was maybe Costco, COSCO. I could be wrong on that. But I think it's one of the largest shipping companies out there. The U.S. Banned shipments on that line. So another has to do with the heated arguments in the trade war in China. And then we put an embargo, I think it was on the Venezuelan shippers. So what happened is it made the cost of shipping oil and gas has gone through, shot up, and that's of course a boon to these guys. Those of course they're reaping the benefits from that. So it's technically based, of course, the breakouts that we're looking at, but also there's a fundamental reason. But those may be fleeting. That's the thing. And so if there's trade talks go well, the U.S. removes the restrictions on those Chinese shippers. Who knows? Maybe the same thing with the Venezuelan ones. Then it changes things around a little bit, and these stocks could fall quickly too. Okay, now let's talk the stock market. Then we'll get to gold. I'll talk faster to get this out there, because again, these are kind of interrelated things. So we have the breakout here. We're still above those trend lines, as I mentioned in the futures. Watch this trend line. The divergences are really stretching the upper limits on the futures here. We'll start here. You have positive divergence as long as the indicators below are making equal or lower highs while prices are making higher highs. So we have flat line and equal highs right now. So it's really still pushing the upper limits of the PPO divergence. RSI divergence has been slightly taken out. But another thing to consider too is we're very overbought right now. And so the risk reward at this point to go long right here is not very attractive, even though we had a breakout today. I'm putting a line here, horizontal line, and what I'm going to show you is what's happened every time that the RSI has hit this level. Where's my circle tool? So we hit it right here. We went up more from there, but not a lot, and we put in a divergent high. So these are things to look for. You can see we're extremely overbought at that level there. Came up. This is negative divergence right there. I didn't have it marked on the chart. These futures roll, and then I have to redo the lines. Divergent high correction. Extreme overbought, and again we had a divergent high. The NQ kept moving a little higher, and that's the peaked out on this left shoulder here. We had this divergent high right there, and then boom, correction. So hit it again right here. Let's just mark it right there. Hit it again, went a little higher, divergent high correction. So these are the things to watch for. Hit it here, divergent high. That one was marked already, correction. We hit it here. And yes, it's been a series of divergent highs after that first overbought reading, but you have to be careful. Sometimes it's a one and done. But either way, maybe we get that. Maybe we pull back this trend line, push back up. Maybe we break this trend line, come back in here and push up and back test it. So either way, you can look at the first kiss of that extreme overbought level. Again, I don't have the 70 and 30 lines here. Why? Because NQ, at least on this RSI setting I'm using, 70 is not the overbought level as it is on a lot of stocks. As you can see, we crossed through the 70 level quite a bit. So I like looking at the extremes, and that's where we're at right now. So that tells me that most likely if there's upside, it's going to be limited before the market needs to either consolidate or pull back. So the breakout already occurred this morning. There was some meat on the bone to chase, and we're walking up this trend line. So those are two things to watch for right now. All right, let's look at ES. You have a comparable trend line. Again, here's that same yellow trend line. And like I showed you earlier, I think that was NQ we were looking at. It seems to run parallel to a lot of these other trend lines here, close to it, that have broken down and led to pretty significant corrections. So, like I like to say, the trend is bullish until it isn't, or the trend is bearish until it isn't. Right now, the very near-term trend defined by this line is up. They took out the, this trend line, downtrend, I should say, that we've had for the last month or so here has now been called into question because we've taken out at least this previous reaction high right here in ES. The divergence pretty much burning through right now. So like I said, I just right now it's probably a good time to take a step back. There's not a lot of meat on the bone, I don't believe, unless you're a trend trader, momentum trading up. Keep in your longs until you break this trend line. Otherwise, you can get maybe a quick short pullback trade and possibly more. Again, I'll watch how this shapes out. I'm just sitting back. We'll see what happens today, see how the day closes, and then I'll look at the daily charts. I'll do an update certainly at the close today, and then we'll go from there. But let's take a look at the dollar and gold right now. I put an extensive post out there with some, screenshots, charts to look at on gold, making the case for a potentially big move. There's, well, let's start there. We'll go back to the weekly chart of GLD. That's what I posted yesterday. And again, a potential setup, any trade setup. And if you're new to trading or investing or new to the site, you need to differentiate between a trade setup and an actionable trade. A setup is a trade idea, a potential trade, usually within a bullish or bearish technical chart pattern or some other posture that's pending. It needs a breakout. For example, on gold here, for a long time I was focused on this 130 level, as well as this triangle. So I said, there was, when you're in this triangle, you could break to the up or downside. Upside break, there's your breakout, and your next objective entry is on the back test. And then the next big powerful buy signal would be a break above 130. And that was a potential setup. What could have happened, but it didn't, is we could have hit 130 again and then got rejected off that 130 level, just like we had every other time over the last few years. So it was a trade setup at that point, even though we were already long gold, but the next objective buy point on a break above 130, so that's where you trigger the entry. So now what I'm referring to at this point is this bear flag, or I call it a potential bear flag continuation pattern. It is just a potential pattern. We could just keep moving down, and then all of a sudden we don't have a bear flag anymore. And what you want to see on a bear flag continuation, you have the move up, impulsive move up, that's called the flagpole, followed by a period of consolidation, usually on decreasing volume, which we have here. And then the buy trigger comes on an impulsive breakout above the pattern, especially if you can take out that previous high. And the measured target, which is that purple line, I just created a parallel line to this trend line that I had here, the first purple line, and then I add that to the lowest point of the flag. And coincidentally, or really not so much coincidentally, it comes in right around, you can see these reaction highs where I have that 173, 174 target there, give or take, comes in right to that level. So as I said in yesterday's post, what would that entail? Most likely, there are no guarantees, because gold already had a heck of a rally this year, along with the stock market rallying. And I addressed that in yesterday's post. I don't want to speak too much to that now. But one thing that it did is gold rallied despite a rally in the U.S. dollar, which is unusual. Again, as I showed you in that example in that chart. And so this scenario would it would quite likely play out, and very similar to this, if two ifs that would really help this case, of course. A reversal in the stock market with a significant correction. In other words, we undercut the lows, those divergences on the daily and weekly charts play out, and we have a 10, 20, or even that 30% drop that I'm looking for in the indexes sometime coming up in the in the coming months. That would most certainly drive a huge flight to safety bid into gold. It could be the catalyst for a breakout here, or gold could break out before the market rolls over. We'll see. We'll watch these charts. But let me flip down now, since again I covered all the daily and weekly charts on the euro and US dollar. Let me show you what's going on today. We do have a sell signal in the dollar. Remember, this is a US dollar futures, DX. So this is a trend line I've been tracking for quite a while. We've been bouncing on it. It is a very valid trend line. What do I mean by that? Well, in trend line drawing, the more reactions that you have off a trend line, the more valid it is. I always say it takes, at least in my book, at least three distinct reactions, meaning here's one distinct, these are close, but they're distinct, and there's definitely a distinct reaction. These are all clusters here, but they're all a lot of reactions there. So you see numerous reactions on this trend line, close enough there. A breakdown, kind of flagging action. You can see the other, we broke down and flag. That looks like a bear flag action. That little, move down your flagpole. Broke down. I'm trying for a line tool here, guys. Bear with me. There we go. Breakdown, little flagging right below the trend line, and then impulsive move down. This is a clear sell signal. This is what I talk about when you see a breakdown. You want to see impulsive move down. We had limp below it, and with that flagging action, now this is a pretty clear breakdown in the U.S. dollar. It's probably under the radar today, I imagine, because I think most eyes are on the stock market, unless you're a currency trader. So there's that. And I also have been tracking for quite a while the Euro futures as well, DX. If you don't have a futures contract, a lot of brokers will give you futures quotes like TD Ameritrade, their Thinkorswim platform. You don't even have to have it. You can open an account and fund it with, I don't know, $50 or whatever, and just to get the chart. They have some really nice charts on the charting platform. So, and again, you can get futures quotes from them. I'm not sure if they have E7, but I think so. Some contracts they don't, but most of them they do. And so you can see a breakout. I highlighted this one as a long trade idea since back here. This little wedge, minor trend line. We broke out. We hit my first target, which was right here. I have that on another board here. I'll show it to you. That is I have it on this chart here in an hourly chart. There it is, that 110.10 level. There was the breakout, back test, first target hit. Resistance once broken becomes support. We danced on it for a while, a little dip below, came up, hit my second target, which was a downtrend line, breakout, back test, and now we're moving higher. So that's a breakout in the euro, breakdown in the dollar. And right now, it's not really benefiting gold. Why? Because gold is also, it's driven by many factors. One of those being the U.S. dollar. But lately, a big factor in gold has been a flight to safety, risk-on, risk-off asset. So here's what's going on with gold today. It broke that key 1492 support level. I've said this one has been, it's offered a lot of objective long entries on pullbacks, everything I'm circling here. We had this breakdown, but it quickly recovered it. Hit it there, bounced again, broke down today, but we're coming to back test it. So right now, gold is in a bearish technical posture. We broke down today, and this is a back test. So TA 101 says, you would either short here on the back test, and that might be the case. And I will say this, if the stock market continues to rally from here, this will probably happen in gold. Otherwise, if today's move, it gets faded in the next week or so, then gold could recover the 1492 level once again, and you'd have, just like you did back here, a bear trap or a false breakdown. That one was followed by a rally. And so again, there's some, micro levels getting kind of granular here on gold. And I can't say with conviction which way it goes, but I will tell you that I'm still leaning towards minimal upside in the stock market, whether or not we push on to make a marginal new high. And so gold, on that weekly chart, nothing much happens unless you get a big weekly candle. Right now, there's only 2 hours left in the trading day, so barring some crazy unforeseen drop in gold today, you're not going to foil this flag. It's going to be intact for next week. So this is just something to keep an eye on. And again, I'm talking trend trading stuff. I've told you guys that the swing trading ideas have been light recently, very light, almost non-existent, due to the fact you can't squeeze water from a rock or blood from a stone. This is the stock market. You can call it, bulls will say consolidation before the next breakout and thrust higher. Bears will say, a market that just can't go up anymore. Every new high is been met with sellers. Who knows? One will be right, one will be wrong. We can consolidate for a while longer. All I can tell you is when you have these ranges, 6, 7, 8%, not much more than that, especially here lately, it's not conducive to swing trading. Once we break out, pick the next trend, it will be. If that trend is down here, that's going to bode very well for gold. And so I'm saying this because if you are a long-term investor, trend trader, even a swing trader, we might have the next, long-term powerful buy signal on gold if it breaks out, and it would only help. If gold breaks out of that flag I just showed you on the weekly chart, but the stock market continues to go higher, it will give a headwind to gold. Why? Because again, that flight to safety, risk off trade comes out of gold. There's not as many people worried about what the stock market's going to do. Again, there are times where both rise, so we'll just have to watch the charts and see how they develop. While I'm here, this is what I'm talking about. We'll see how today finishes, but right now it's going to take a heck of a reversal because SPY has regained that trend line. And as I said, these trend lines have had to been moved a lot. The trading was sloppy around them, so they're not the most valid trend lines I've seen. But with that being said, there was also some minor downtrend lines as well. Bottom line is everything I'm seeing today near term is bullish, and unless these get faded soon, that's a possibility. Otherwise, that increases the odds we're going to go up and make that marginal new high, and then we'll just have to see how things look from there. QQQ, similar story. Let's look at this board. Popped above the trend line the way I had it. The most recent draw. Let's see. Let's look at this. I talk about trends. Here's another trend line, and I believe I showed this on the 60-minute chart of QQQ this morning. Yes, I did. Here's a trend line off the recent highs right there that still may come into play. We have 1, 2, 3 distinct reactions. You can see them here on the 60-minute chart. You can see them here on the daily chart. 1, 2, 3. So we'll watch it. If we get a fourth, if we just go on through there, then like I said earlier, that's a what I call a minimally validated trend line because there's only 3 reactions. If we get a fourth reaction, then hey, something to keep an eye on. And if we go on through it, as I've been saying for weeks now, any new high anytime soon will be simply a marginal new high, and because of these divergences, I suspect it won't go very far. But that's all relative to because some people I've seen plenty of traders that are stressed out when the market goes up 2% in a day or 3%. And that's just par for the course when volatility is high. So try to quantify it. I'd say from where we're at, maybe 3, 4, possibly 5%. Maybe not. We'll see. We'll just have to play it by ear. And the other one is, of course, XLK. That took out that near-term downtrend line there, and you can see, the wedge in XLK. Should it go higher, it has plenty of room to go higher and still keep these divergences intact. If I extend these divergence lines, it just depends how they look. As long as they don't take out these previous highs, you have the previous reaction high right here, in the RSI and PPO, and then these previous highs. So, but as I said, with that near-term downtrend line plus this uptrend line, both of these uptrend lines being taken out today, I cannot spin today as anything but near-term bullish right now. And I will say there's that trend line on XLK right there, drawn off the 60-minute chart. You have a couple reactions here, another one here, and all day so far today, pointed these out. That's what's capped today's advance. So if we do pull back, then that's yet another reaction. Then this becomes an important trend line to watch. And again, XLK is, to me, the most important sector in the market to watch. That's it. Let's wrap it up here and see how today finishes, and of course how we carry through into next week. That'll give us a good idea of whether today's breakouts are going to stick and then be built upon. And like I said, I'll be keeping a close eye on the dollar and gold. The dollar breaking out or breaking down today should normally be bullish for gold, but the crosswind here is we have the stock market going up, and that's bearish. So therefore, I think it's best to stand aside and see how both the markets, gold and the dollar, all trade into going into next week. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.